Welcome to the Daily Brief. This is being prepared Friday, August 12th, where I'll briefly cover the high points of what happened in the market today and then see how things look for Monday, August 15th. And it was a positive day. We were up pretty solid with the S&P 500. All of the sectors ended up being up on the day. However, we're starting to see a little bit of concerns along the way. One is that we're rising pretty fast and we're starting to get to more of an overbought reading on a short-term basis. We're even seeing that a little bit in the intermediate term basis. And we still have some pretty significant overhead resistance at the 200-day simple moving average. But other than that, everything looks rosy. So let's go back and talk about what happened briefly. Right at the open, we did gap higher, and we actually got above the daily pivot of 42.22, which was a pivot point in Thursday's session. Prices then got above R1 at 42.43. As the day went on, we kept going. We got up to R2 at 42.80. Going into the close, we closed right at the high of the session, and we ended up being up 1.73%. But volume was below average. However, we've been seeing a lot of that in the summer. The technicals are still positive, but looking a little toppy, and we do have some resistance overhead. And I would ask that if you really want to see the charts and see what I'm showing, then please go ahead and go look at the full-length video of the daily video update. Inflation and interest rates are still the big concern right now. There's a whole list of geopolitical events. We have earnings that are coming out right now, and then the debate continues to go back and forth. Are we in a recession? Are we not? Just what is a recession, and how should we define that? So let's go back and look at the comments. The S&P has now retraced over 50% from the all-time high in January to the low that we set in June. It's got back 50% of that. That's pretty positive. The first half of the year was really terrible. So far, the second half of the year is showing some improvement. Now, what's going to happen in the future? We don't know. All we can go with is what we see right now. Also, all of the sectors, as I said, were up on the day. The sector rotation, the positive scenarios, the setups that we're looking at, yeah, they're still positive and they're still looking okay, but we're starting to see some slight negative divergences. They're not going up as fast as what you would think that we would see, especially on a solid up day like we saw in Friday. Then the 200-day moving average still looms above where we're at right now. And if we continue to go up, without really any pause in what's happening right now, which is kind of rare for that to happen, we could hit that overhead resistance just at about the time we hit a pretty significant overbought situation. So that's just one thing to keep in mind. And I go through that in the charts. The 10 to the 2 and the 10 to the 5, they're still inverted overall. We're still pretty much neutral, leaning a little bit towards the greed side right now, but neutral for the most part. We had consumer sentiment come out, and even though 55.1 is a pretty low reading, they expected it to come out at 52.1. So that actually showed a bit of a bounce. So there's a little bit of hope that's starting to creep in with folks. Import sales ended up falling 1.4%. And all of these reports, the prices, when you take out oil, they fell 0.5%. These are feeding into this idea that maybe, just maybe, inflation has topped out and it's starting to come down. Now, we were spooked by this not too long ago, where the market started to develop this scenario and it ended up turning to nothing. We still want to be vigilant about this and keep an eye on all the economic reports that are coming out. We still have employment that's still looking really strong. Export prices ended up falling 3.3%. If you take out agriculture, they still fell 3.3%. Our trend is still positive. With the update, the bias is clearly positive right now. And even though we had a number of down days, they were not real significant down days. So I'm keeping the momentum as positive. So what's our outlook then for Monday? The technicals are positive. Some of them are becoming overbought, and we still have the 200-day moving average above where we're at. Sentiment is still pretty much neutral. We have the Empire State Manufacturing Index coming out, as well as the NAHB Housing Market Index. Those are not real biggies, but Empire State, that's New York, and so sometimes that can take on some importance. And then all the geopolitical events, with the big one for the markets right now are inflation and interest rates, and then this debate going back and forth about what is a recession and are we in one right now. So our scenarios, we can't really say we're going down yet, even though we're seeing some warning signs. There's still a number of headwinds that could hit the market at any time and become the main issue to freak out about. But the one thing that I added at the end, the S&P is becoming overbought with overhead resistance still above where we're at. The technicals are positive, so we can't really develop a down scenario. We do have an up scenario now because of those positive technicals, but they're becoming overbought. There's a real disbelief. A lot of people think this is still just a dead cat bounce, that we're not going to go pretty much any higher. But if we do, if for some reason, if we get above that 200-day moving average and close above it, that could produce FOMO, the fear of missing out. If you recall, last spring in March, we were going up. Nobody believed it. The market had a really strong upward move. And just about the time that people were starting to think maybe this is for real, that's when they jumped in. That ended up being the top. So will something like that happen? If we get above that 200-day moving average, people are going to start jumping in. There's a lot of systems out there. I teach one in my courses that when we're above the moving average, go long. When we're below it, you go short, the 200-day. So a lot of people will kick into gear if that ends up happening. This could produce some support. Our scenarios are still looking okay. Our setups are all right, but still we're seeing some negative divergences. We're above all the moving averages that I chart right now, except for the 200-day simple moving average. And that's the line in the sand chart that we look at. We're not going sideways right now. Okay, so our conclusion then is the S&P is positive, but on a short-term basis, it's becoming overbought, as well as almost an intermediate term basis as well. Short term, positive but overbought. Intermediate, becoming overbought. We're still negative because we're below that 200-day simple moving average. So thank you. Please feel free to check out the long edition of the daily video update if you want to see the charts, and I go into a little bit more detail of what I'm seeing right now. So have a great weekend. I'll prepare the next daily brief after Monday's session.